How is it going, everyone? I hope you all had a green day today and a green week. I'm going to talk about today, trading against the trend and being able to still make money, how we do that. So I'm going to go over my executions today. For those interested in seeing yesterday's executions, I know I didn't upload. We'll do that at the end of the video. We'll go over the makings of the daily plan, and looking at the executions, we'll actually look at today's intraday order flow. So today we trended and currently are trending down, right? And I took two trades, both longs, one scratch trade, one winner. And yesterday we had a trend up and same exact thing, but opposite. I took two trades, both short, one scratch, one winner. So how do we do this? Well, first is going to be knowing where to trade first, right? Inflection points. So actually, this rule I broke yesterday and today. I didn't trade at inflection points, but there was more to it, and there is a reason why I was trading. I wasn't trading blind, and that was the order flow. So let's talk about the daily plan, and once we start talking about the actual execution, then we will break down why I was taking these trades for the most part. So daily plan, as always, starts with the TPO charts. So I was speaking with a trader today who is new to order flow, and they were saying how intimidating it is looking at footprint charts. Those charts we're just looking at with the candlesticks, with the numbers overlaid. If you're unfamiliar with those, just go to the home of the YouTube channel. It's a bit old video, outdated. My recording's not as good. It's not too good now. I apologize, but it's worse then. But it's an intro video, and it explains what you're looking at. So they were saying of how intimidating it is. It's very complicated, and I understand that. When I was first learning this, I thought the same. When people join the room, they think the same. No one comes into this thinking it's a breeze, right? There's a little bit of a learning curve. So with TPO charts, I know that they look intimidating because we have a whole bunch of letters and we're used to looking at candlestick charts with price. But time is a huge factor in the markets. So what do we use these charts for? They make the current auction, or the market auction. It makes it more palatable for our eyes. I know it doesn't look it as a newbie, but it does. So we look at the shapes of each profile, right? This looks like a capital D shape. We look at the highs of profiles, the lows of profiles, value area lows, value area highs, points of control, not to be confused with VPOC, which is volume point of control. Point of control is where we spent the most time, right? Time is a key factor. So why do we need to know market structure, right? But we have order flow. I thought order flow is the key. We just see sellers, we short, we see buyers, we long. No, definitely not. That's not how it works. Market structure is key. And this comes into why I was taking trades not at key inflection points, right? Because we had order flow when we had some stuff in the auction that was on my side. So I come here in the mornings and I look at what the overnight session did, right? I already know what's been going on the past few days. I just check up and see what I missed overnight during the London session. From there, I come over to my 4-hour chart. Another question I was asked today is, do you use the 1 minute? Do you have the 1 minute data? Because they were new to the CR charts as well. So I do have, the 1 minute. I don't use it. I don't actually have it open. That's my personal preference. I have, off smaller time frame speaking, the smallest I use is a 5-minute time frame using footprint charts. Sorry, I don't know if my screen went black. 1 second, let me pause. Alright, this should be good. Alright, sorry about that. So, where was I? Oh, time frames. So I use the 5-minute and the 30 is my two smaller time frames. Then I have the 4-hour and the daily. And those are my main 4 time frames. Sometimes I'll use the weekly, but not really. It's really the daily 4-hour to look at larger time frame to participants, see where they're located. Do we have a bid somewhere? An offer is a bid walking up on the tape? Is an offer walking down? Is one side jumping up or down on the tape? Do we have trap volume somewhere? Do we have high volume areas, low volume areas? Do we have exhaustion at highs? Do we not have exhaustion at high or at lows rather, like right here? Each of these things mean different things, and we put that on top of what we know from the auction, from the TPO charts, right? So what we're doing here is building context to our market knowledge that we can then overlay our framework of trading on top of, right? We need context and framework for our trades to, over time, work out, right? If you want to be a career trader, you need to minimize your risk in the market. One of those ways that we could do that is having confluence, right? So I'm not only, if you're a chart trader, I always use this example, I'm not trading every double top or double bottom that I see on a 1 minute, right? I see a key inflection point that I use my tools and have a lot of confluence at this area. I see a double top, I'm going short, right? It minimizes your risk in the markets. So I'll annotate the TPO chart. I annotate this 4-hour chart. I flip to the daily. This is my last part in the daily plans. I come here, annotate it, and I send these annotations in the Discord daily plan tab room. And yeah, it's the same exact things that I'm looking on the 4-hour as I am on the daily. You know, high volume areas, low volume areas. Do we have exhaustion at lows or highs, or are we not done? Is the auction telling us that we still are going to transact more there? Looking at things like breakouts. Is it a breakout or is it a stop run? All these things you could tell using the order flow. Without further ado, executions, right? I'm just trying to think if I missed anything. Oh, I have to turn off this. So here is my executions. I have to turn off sim. When I'm done trading, I usually lock my charts and flip to sim to make sure that I don't accidentally enter something. Let me just pull up my charts. Alrighty. So let's begin with today's trading. Let's have the 30-minute chart as well, so we could have this side by side. Kind of see what I was looking at. Alright, you know what? I'll do one by one. So, coming into the open, I was thinking, you know, that we were going to continue trending up and we would get to see this sell zone. So, as we auctioned up in the open 30, I saw, what do we see right here? A large chunk of volume. And watching the tape, you know, smaller time frames, 5 minute I'm talking about, you could see that there's an offer here. Someone is trying to sell this. I saw this and I typed in the Discord room. I said that I'm going to be waiting the sell zone. I'm not going to be taking this short. I want to have patience. I want to see that this offer gets built, gets stopped out, and then I can enter short. Didn't happen. And you know, that happens. So when that happens, you got to go on the sidelines and wait. So I said in the room too that this 50s area was an area that one could look for long, but I didn't have it marked because I didn't really love the level, right? If you guys follow me here, or subscribe to me here rather, or on StockTwits, you would know that the daily plan was these two sell zones, these two buy zones, which, as we can see, as of now, we have a beautiful zero print. This is picture perfect exhaustion, right? Zero print, no one else is willing to transact down here. We go up, and on a trend day down, this is our first big bounce, actual bounce, where this gave over 10 points, probably 15 or something like that. So I had to have patience. Now we are coming into this level, and where is? So this was the morning, right? We were up here, this offer is building, and we started to break down. So I was patient, and I took my first long here. Now, when I was looking for that offer up there that's not pictured anymore to be stopped out, I was looking for the same thing here. So when we come into this price range, we could see us consolidating, right? Now, I don't have footprint charts open, but I think one could probably visualize this on the 1 minute chart. I go into more nuanced detail and stuff in our private recaps and in webinars and whatnot, but to keep this simple, because I know there's a lot of newer people watching here on YouTube, I think this might be better. So as we're trading down and we start consolidating, when we start consolidating, what do you think is happening? You're going to have people on these wicks up selling, right? They're like, oh, pull back, we're going to zero. I think we all know those perma bear types. And now on the other hand, you have buyers, sorry, at the lows saying, oh, look at these wicks, we're finally stalling, and they're going long. So we have people positioning themselves short and long. So we pop up here. What happens here? Well, we just stopped out a lot of these shorts. We come down, we stop out these longs, and I see, as we come up, I see a rebid on the tape. Someone is buying this down here, rebidding it. Nice. I enter. This comes a single tick from my first target, as always, is 2R. I risked 3 points, so my 2R is 6 points. And so I put my stop to break even plus 1 tick, and I was stopped there, break even plus 1 tick. No problem, I'll wait. Alright, so continuing on, we have this stop run, low of day, right? You're going to have people, or we did have people in this area looking at this low. They're like, oh, this is going to double bottom. They're buying here. We get a quick impulse low, and that's where I long this second time. Impulse down, I see someone bidding down here on the tape. I go long. This point was, or this target was 2R, so 6 points, and I took half off at 2R. And then I'll stop the rest, break even plus 1 tick. So, you know, it's not a day, it's not a record-breaking day, but, you know, I collected my coin, and I said I'm leaving it. Now, funny enough, this actually did continue down. I don't think I have sell zones marked here. But, you know, my word is my word. I said in the room to keep myself accountable that I wasn't going to trade more today, So we come down, and the buy zone was 40. 235. Alright, you get the picture though. And we'll flip this green so it's more aesthetically pleasing to the eyes. And we'll look at these wicks. We see a buyer here, right? I don't see a stop run though. So someone's buying here. Comes out. Stop run, right? Lows here. Stop them out. And I actually entered long in sim here, right? I flipped to sim when I'm done, and I was 39 halves was my fill down into here, and now I'm just managing this in sim. But again, it's sim. So my trades yesterday. Is there anything else for today? I don't think so. So my point for today's video in actually making money and being on the opposite side, just to rehash that, is trading at key inflection points, and always having a stop loss, right? Like you always need a stop loss, but especially in like a trend day, right? Fighting a trend, I couldn't even imagine a number about how many traders it's taken out of trading, trading at against trend or fighting trend. You know, for me, I have 3 strikes. If I'm down 3R on the day, that's it. I'm stopped out. I'm at my max daily loss. That's it. You know why? Because I know that the next day, taking 1 trade, I can make that back. That's fine. You have to think about trading as a career over the long run, minimizing your risk exposure in the markets, having set rules, risk parameters, daily parameters, weekly parameters, all of that, right? Because, you know, even though you know you're going against a trend, you get to a certain point where it's like, you know, say you're risking a dollar amount and you risk, let's say, $5. You know that you're paying the market $5 to place this trade. I see buyers at a key inflection point. It's worth the $5 to me to risk this. I put down the $5. In your head, $5 should be spent. That's it. I paid my dues. Now this $5 is going to turn into 10, 15, or it'll be 0, and it's not going to be my $5 anymore. That's how you have to approach the markets. The money is not yours, not until you close the trade, or not until you take a partial, not until you close the trade, but until you withdraw that money and it settles in your bank account is the only time you consider that money yours. Unrealized profits mean nothing. Weekly profits don't mean anything. Monthly, whatever. It's only until you cash out and get that money in your account is the only time that money is yours. And that's how you have to think about the market, in my opinion. So yeah, let's just quickly go over yesterday's trades. I don't remember what time. Here. Okay. So this was, we were trending up, right? I can go like this, just at a zoomed out view, of course. So this is pretty much yesterday's trading, all the way up. Now we come up here. I took this one short. This came, I want to say this was another time that was like literally one tick. It could have been a couple ticks, but you know what I mean. It came right to my target. I think it was a tick or two though. And I stopped out break even plus one tick. Zoom in now so we can just see this better. There we go. So break even plus one tick, no problem. And funny enough, had I respected my risk, I always say, you know, I was just saying, you pay your $5, for example, you pay your $5, your risk is on. But I cut this. Now, oh wait, am I thinking of the right trade? Let me. I was filled at 47.75. Oh no, I'm thinking. Sorry. So this didn't go. Usually, if it goes like 4.5, 5 points in my favor, I'll move my stop to break even. It didn't do that. We had a nice tape bomb. Is just what I like to say. Huge tape bomb on the tape. And I thought, if this comes back to my break-even, thesis is wrong. But that's just, me getting in my head after I'm in a trade. I'm sure if you're a trader, you know that, the second you enter a trade, or, before you enter a trade, you're like, oh man, this is going to go long, this is going to go short, perfect. And you just have your hand on your mouse and you're waiting to enter, and the millisecond that you click enter or click the buy or sell button, your whole brain reverses, or at least that's with me, and I know a lot of other people. Your brain's like, oh no, why did I do this? I'm going to get stopped out. And each ticket maybe goes against you or whatever, your brain's just racing. So when it came back to my break even, I took the risk off. And had I left it as my original plan, if I just trusted what I was thinking and my reading, well, I would have gotten my 2R at least. But it is what it is. I stayed with it, and let's take a look. So we see sellers, right? We see the consolidation. Stop them out. I'm entering with a seller, half off at 2R, and stop the rest at break even. So, right, similar yesterday to today, just slightly different. So yeah, if order flow trading is confusing to you, go and watch that video. Go and watch other people's videos. You don't want to learn from me. I'm too confusing, or I don't know, whatever. But if you do see an edge in my approach and would like to learn from me and how I trade, market auction theory, TPO, footprint, all that fun stuff, I'll leave a link to my website in the description. I hope you all have a great weekend, and we'll be back together next week.